Welcome to the Titans of Industry weekly interview. When I say that this show has a wealth effect and a value that is far and beyond theories that you might learn in school, college, or any other academic institute, I say it simply because the people we talk about on we talk with on a weekly basis are those who get things done and don't write it on a chalkboard. Listen, these people are what drives business forward. Business happens when you are out there talking with people and gaining wisdom, regarding how you can add value to others and get paid for doing so. So today, I am absolutely excited because you get to listen to one of those sophisticated money managers that are very rare in the resource industry. Frank Holmes is CEO and Chief Investment Officer of U.S. Global Investors. His resume is too good to even talk about. He wrote the book, The Gold Watcher, Demystifying Gold Investing. His letter goes out to 180 countries on a weekly basis. He's won awards. His team has won awards. He's a sought-after keynote speaker at national and international investment conferences. He's spoken on, in Africa, and just all over the world. I'm very pleased to have him with us. Frank, how are you doing today?
Outstanding.
I'm very.
Thank you for that very warm introduction. It's very kind.
Oh, no worries. I met you about 2 weeks ago when we did a 5-day tour, and we spent some quality time together. I was so impressed that I had to have you on here, and I want to start off with a personal question. I would say, how did you get started? So many people listening to this interview want their break and want to move forward in their career. How did you get started? What do you think drove you to such a high level of success? And why did you go into resources?
It's a bunch of questions, and I think that I was originally going into medical school, and I was a pre-med, and my uncle was the dean of medical school at Western University in Toronto, London, Ontario, said that socialized medicine, I'll be in school forever, and I'll have debts until I'm 60. So take off the H and put on a W and manage wealth. So I laughed and I made a career change and went into economics and natural sciences. That really helped me in investing, in understanding the physics, chemistry, and how it applies. And I also think that in Canada, that the education, when I was there, we learned Geology 101 in grade 7. We went to go look at moraines, how the geological footprint of Toronto was, the Niagara Escarpment was created. I remember Silurian or Devonian seas, and one rock weaker than the other, and so you just became involved in appreciating geology at a very young age.
That's very interesting, and I bet many Canadians would resonate with that. And this person who gave you this tip, you should really pay him back one day, huh?
Yeah, I think teaching, I think it's important. In life, it's your explicit and tacit knowledge. Is what you learn from reading a book, and then how you learn going out to try to make what the book suggests you to do, or build relationships like you and I. That's just a wonderful event that was filled with both explicit and tacit knowledge. And I think you asked me another question, sort of the things that drive you. I think curious to learn and improve. I think my parents, I have to thank, were always very consumed with curiosity to discover why. And I learned in life that hustle factor, and that people trusted you more if you showed more initiative and more responsiveness, and you were always just curious to learn and improve. And the last thing was performance inspired. I just love winning. I hate losing. I love winning. I'm even finishing reading an article. I go, yeah, I won. I finished an article. I think that they're important factors that you learn from your family.
Sure, and regarding this winning feeling, I guess we both share it, because until my last day on the planet, I will all have this feeling that I gotta achieve more and more and more. I want to ask you about resources. So your fund is bar none probably it's world famous. How's resources different than other niches or industries to invest in, and how do you make sure that you can protect your clients from risks and the cyclicality and volatility that's so inherent inside of resources?
Well, first of all, it's a paradox. Mining, it's a long cycle to develop a mine or to expand a mine. It's just a very long cycle. However, the stocks trade by the hour to the price of the commodity. So it's really fascinating that you have to think both long-term and slowly and thoughtfully, but react and respond short-term. And to recognize. Earlier I shared with you of my science background, and I think understanding chemistry, understanding physics, that these sorts of, sort of a quant approach is so important. So when we look at commodities, we like to look at relative strength of commodity A over B to understand the supply and demand factors driving it. We like validation, confirmation that the 1 month is above the 3 months. Means there's a short-term trend in place, and if the 1 quarter or the 3 months is above the 12 months, it means a longer trend is in motion. And then to really understand the supply-demand factors are driving that. If it's just a short-term supply factor, a supply restriction to drive the price up, can it quickly be changed? And that's the classic written rate today. What's happening with the price of oil and Saudi Arabia cutting a deal, which I said earlier was like a wink-wink with the Iranians. Let's get the price of oil up, and we can tap the capital markets for a much higher valuation of Aramco. And by the way, if we're successful, then Iran, you want to tap the capital markets and open up your capital markets, you'll be successful. So I think that's a supply restriction that's helped elevate the price of oil, and usually that's not long-term sustainable. I think that more sustainable is cobalt prices. Cobalt prices, 70% of cobalt comes from the Congo. That country is just a completely disastrous nation, dysfunctional country, and if 70% of the world's cobalt is not coming into the capital market, into the economy, then we're seeing a surge in cobalt prices, and the demand is going to remain very, very strong because of cars like Tesla and along with lithium. So it's understanding a long-term demand cycle and then any short-term cycles. So the short-term for oil is very different than what's happening on the supply restrictions coming out of the Congo.
That's a very unique way to put it. I've never heard anyone else talk about this fact that honestly, resource stocks, they move very slowly with regards to their operation. I mean, a drilling season is something that takes months. Building a mine takes years and years. Permitting even takes years and years. And on the flip side, you got to react to short-term news and what's going on with the commodity itself. So that's very good advice. I want to ask you something. You talk to some heavy hitters. I bet on quite frequently, and what I want to ask you is this: there's some funds that their mandates don't allow them to buy certain type of assets or equities or physical bullion. Do you get to talk with people that are very concerned about what's going on with with the fiat monetary system itself, with the banking system itself, with the government and the way it's structured, and they fear a collapse or a reset, and they can't buy gold for their funds, but personally they do? Do you have this double standard going on that you know of?
Yeah, it's an excellent question. You do, and you find that it's predominantly the value fund managers that love history, and they can put things in historical context, and they look as gold as a value proposition, and so they buy personally. But they're big cap, blue chip, S&P 500 value stock pickers. So yes, I meet them. But on the flip side, I've met over the years these gold bug fanatics. And it always reminds me, I tell when I'm speaking, the joke of Mr. Sanders kept saying, "Oh God, why me? Why can't I win the lottery? It's not fair." He's always lamenting, complaining, looking up. God, I'm a good person. I give, I save, I'm good help to the community. How come I can't win that lottery? That lottery is now up to $50 million. I keep buying tickets, and God opens the clouds, open up, and says, "No, you're not. Buy a ticket." So you get the gold bugs that tell you the world's coming to an end.
Sure.
But they never buy gold. They use gold as their emotional proxy that they don't like the government. So you have to differentiate that person that really doesn't understand global economic policies, the difference between a Keynesian view of the world versus a Hayek, a Ludwig von Mises, and understanding that it's a binary model. It's so important to recognize monetary and fiscal policy drive government policy. So monetary policy is money supply and real interest rates. Fiscal policy is tax and regulations. It's really simple. Taxes is individuals and corporations. Regulations are subject to individuals and corporations. So they do have an impact on overall economic activity. They just don't like the government, so they just get in this emotional diatribe, and they never buy gold. It's bizarre. Now, the more sophisticated person that appreciates history and says there's going to be imbalances between the fiscal and monetary policies of any government, and this is when it's so important to always have some gold. And when gold has this massive surge, you take some profits off the table and you buy some other asset class that's down. And there's this sort of mean reversion that takes place in all capital markets.
I understand. And you know what? In Wealth Research Group, at our free letter, we talk about this difference, and we actually term this Metalionaires. And these are astute investors who realize history repeats itself, and they learn these cycles, governmental cycles, central bank cycles, business cycles, and they take advantage of this knowledge because things repeat themselves in the gold sector, especially. I personally call this an accounting period where gold needs to meet the new currency supply that is being created. And there's no speculation that it must do this. This is what it does. It's a move from quantity currency to quality money. So Frank, I want to move forward here and ask you this. I mean, you've done personally so well in your life. You get paid and rightfully so, an enormous amount of money every year to think. What qualities separate you from others? In other words, what are some highly developed mental skills and analytical skills that you can trace in yourself that are absolutely critical for business success? And maybe you can give some tips on how to develop in those areas in life.
I think I mentioned earlier to you, what I learned from my parents is being really curious, like a little child. Why? And as you become an adult later in life, you can still have this inquisitive mind. If you feel you're forced to read something, you won't retain it. But if you're really just that curious, then I think you can discover more things. And then this thing about I mentioned, performance inspired. You just have to be inside of yourself. Little goals, little accomplishments lead to big goals and big accomplishments. I think that they're important. And if it's what you know and who you know. So in life, if you know everybody, but you really don't have something that's important, like a doctor has to offer for medicine, or do that right like yourself, that you have advice and guidance to give people, you don't have the what, then you become a social butterfly. If you're just the what and you have all the facts, and you're the geek. And you find that the successful people are in between. They know what's important. They know who's important. They're curious to know what's important, and they're curious to know who's important, and they're smack in the middle. If you look up an XY axis, you'll see that they're the more, balanced people in life. So it's this curiosity to make sure that maybe 1 week I'm going to be really out and building unique relationships and being curious about other people. Not everyone's wealthy, not everyone's successful and done all these great things. And a lot of people, they're still good people. They have good values and good family values. And it's just showing that you respect people. And when you do that, I think your life is enriched.
I couldn't agree more. That's a very important advice. Frank, I want to ask you, like on a 1 to 10 level, just your confidence level regarding the following resources. Just be brief and give us a grade and maybe a talking point or two. Gold.
Most bullish on gold. The world struggles with a massive imbalance between monetary and fiscal policy. There's no will to have fiscal pullback and that is streamlined regulations and tariffs, etc., and taxation. So I think this imbalance will remain, and gold will be the most significant asset class right now. It's the fourth most liquid asset class in the world, and I think it will become more important.
Silver.
Silver is the warrant on gold. Historically, any move of a 1% move in gold can translate into a 3% move in silver. Silver is a lot less. There's more industrial demand for silver, so any global economic buildup, along with a trade like we had from 2001 to 2007, silver can skyrocket back to $60, $70. Back to 50, and I think it can go to $60, $70 on this next cycle in the next 5 years.
And let me ask you a follow-up on silver. What would happen if even one central bank says, okay, silver is money, let me accumulate silver, not just gold? Do you think this will create an overnight shift just globally in the mentality and bring this back into a monetary metal like it was for thousands of years? What do you think can happen if just one bank says, hey, silver is money?
No, I think that's a very good observation, and I think it does trade much higher based on that. That sentiment would be very important.
Okay. Zinc.
It's a good question. Zinc is so, it's a byproduct so often of silver mines, and zinc was, I'll give you interesting trivia. Zinc was the first catalytic converter before platinum palladium, what the Japanese came up with. And zinc prices went up tenfold when it became the first use. So I think the zinc is so important for stainless steel. So one has to take a look at housing, construction, cars to see what zinc have this super smooth zinc. But I think the supply side from zinc is low, and I think it's easy for it to surge on any global economic pickup.
Perfect. Uranium.
Uranium is a wild card. Uranium tracks with the price of oil and energy, highly correlated, and you'd have to have some geopolitical event of disruption that would trigger a surge in uranium prices.
Now, is it accurate to say that the Chinese are planning basically their entire energy plan with uranium in mind?
You hear about this all the time, but the uranium prices have not gone through that sweet spot that says you've got to change. So I think I'm sitting on the sidelines in uranium.
Sure. How about oil?
Oil is going through what you mentioned earlier regarding a sort of a peace treaty short term between the Sunnis and the Shias, that is the Iranians and the Saudis. And I think that unless you get big global economic GDP growth, oil will fluctuate between 40 and 60 at the very top, all because of the technological improvements. Last week I was down in the Eagle Ford, and it's amazing on the use of technology, what they drill for oil, how much they drill, and for natural gas. So I am not as bullish on oil, but I am much more on dry gas, natural gas.
And you know what, Frank? Low oil prices are very good for the consumers, and they're very good for mining companies. That's probably the highest expense for them. And so there's a good side to low energy prices, that it helps the economy in some other aspects. Do you concur on this?
Yeah, I totally agree. It's a significant factor, and currency is the other factor. So the Australians having a weak currency and weaker oil prices allow these stocks to have incredible cash flow returns on invested capital. And some of these companies have been the best performing gold stocks for the past 1, 3, and 5 years.
Interesting. So finally, copper.
Copper, I think copper is going to float around with global GDP. What our research has shown, and you go to the website at usfunds.com and you'll see an article we've written on PMI. We've written several articles on PMI, Purchasing Manufacturers Index, and we've done a lot of work as PMI is looking forward. GDP is what's happened behind us. And it's more important to think where you're going. And so when we look at the 1 month versus the 3 months, and when global PMI, the 1 month is above the 3 months, usually copper prices and oil prices pick up, along with gold, but in particular oil and copper. And the more months the global PMI has this trend of 1 month above 3 months, the stronger the demand for copper. You can just see it start to take off. It's a way of playing momentum. And right now, the global PMIs are positive, so that's helpful for oil prices, along with copper.
Sure. Now, Frank, I want to ask you. This is a more business and investment type question. What's your view on businesses that are what we call satellite businesses as Wealth Research Group? And what I mean by this is I love businesses that take on less risks by becoming vital to key market players, but not participating in the traditional aspect of the business. Like I would say prospect generators do in the mining sector, pipeline operators do in the oil and natural gas industry, and maybe most famously is Levi Strauss, who without getting dirty a day in his life made a fortune on the California gold rush by understanding that all these prospectors would need genes, and obviously we all know it's the ones who sold them the pictions, shovels, etc. So do you personally invest in this? What do you feel about this niche called satellite businesses?
Well, I remember my first time being a young guy in financing. My first financing ever was Franco Nevada, a royalty company back in the early 80s, and going to Reno, Nevada. And one of my mentors, Seymour Schulich, is the biggest philanthropist in Canada in funding universities. And it was his idea of getting royalties and gold mines. But he also had the Mustang Ranch. And that was one of those companies that was to go public, and it was related to the gold boom. It only happened in Nevada. The Mustang Ranch was a bordello. So I'm being cheeky and teasing you to answer to your question, but I think those ancillary businesses are really important. And in our modern era, it's technology. And let's take a look at the oil. You asked me about oil earlier. You want to take a look at a big mega cap stock called Core Labs. It's remarkable because they do all those 3D graphics. They keep all the seismic work. And so rather than spending, the guy that's going to spend $1 billion drilling for oil in the Gulf of Mexico, they can't move with all this data. And this data is like having old films. When Ted Turner went and bought MGM to get the film library, they have extensive data, and now with new algorithms, they can analyze data faster, better, and smarter, and help the drilling so that they don't waste $1 billion drilling for oil. So I think when you look at these stocks, their capital expenditure is much less risk, and these oil and gas companies need this industry vitally. And that's led to the huge energy boom in America with fracking and well enhancement. So it's this technology companies like that, and I think the smaller micro caps that are in that space, they just get bought out by the core labs.
That's very interesting, and that's exactly the type of companies that one should look at to diversify and not only risk all this money in traditional companies. Frank, I want to ask you on a macro outlook. So the Western world right now, what it's experiencing is the end of this long-term debt cycle, and people who care about their retirement and their future need to understand exactly where we are on these big mega cycles, like this demographic gap and what it truly means for developed nations. So, you know, what's going on right now, the governments will either have to hyperinflate this debt burden or default on it, or maybe just Asia and their middle classes start to take over slowly and buy U.S. equities, and in 20, 30 years, they control most of the equities on the planet. How do you see this debt burden, along with this demographic shift in the Western world? How do you see this play out? And, do you have any concerns about this?
Well, I always have concerns, but I think what's interesting is what's called autocorrelations, or mean reversion. And in the laws of physics, things will stay in motion, momentum, until some force works against it. Some friction will slow it down. And friction that can start a great business will be product competition. That's why Warren Buffett loves to have a moat around his business. Or it can be government regulation saying you're making too much money, we're going to tax that business or move the goalposts. And so that can be disruptive to this momentum that a industry has, a company has, or even a country that's on a tear. Immediately everyone gets jealous of it and wants to have tariffs put up against it, etc., to try to slow down that growth. So you get this sort of mean reversion that takes place, and I've written a lot about it. You'll see on the website. It's called Managing Expectations, and I try to explain to people that you apply basic statistics to understand the DNA of volatility, and that each asset class has its own DNA of volatility. So what is gold? Well, over the past 20 years, 70% of the time, it is a non-event for gold to go up 20% in 12 months or fall 20%. That's its normal DNA volatility. Anytime it falls more than 20%, back up the truck to buy. Anytime it starts to go up 20% over a 12-month run, start taking profits. And that's always done well because mean reversion takes place in every asset class. They can only rise so far or fall so far before all of a sudden they start reverting back to their average. The average can be sloping down or the average can be rising. But that's a law of physics, and it's so important to see how your science background can all of a sudden impact how stocks function.
Yeah, it's I can see that. I can see that you refer to it all the time. It's very interesting.
And so with that, I think that the robo-allocators is probably going to help investors to take a lot of that emotional sting, that they go through your cycle graph and they're going to make sure that they rebalance. And I think the most important thing for investors is to realize that whatever your age is should be in equities. And so if you're 50 years old, you should be 50% equities and 50% into equities that are paying yields growing, or very short-term bonds. If you go long-term bonds, like junk bonds, and you're really buying stocks because that's the embedded return. And you rebalance each year. So now I'm going to be 60 years old. I should be 60% short-term income and 40% long-term equities. Now I'm 70 years old. I should be 30% equities and 70% short-term income. And I rebalance each year. And that thought process of having gold as a 10% weighting, and when you have these incredible runs in, like we've had in gold and gold stocks, you take some profits and you buy some short-term bonds. All of a sudden, gold's going to correct. You have the cash, and you're going to be able to buy the gold in that correction because they all go to this mean reversion model.
Very interesting. Finally, Frank, if people want to get a little bit out of you, learn more about what you're doing, read something read your newsletter. What's the process here to reach out to you, to reach out to the firm and learn more about Frank Holmes and what you're doing?
Sure. You go to usfunds.com, usfunds.com, and you sign up for the investor alert. It comes out every Friday. It's much more like professional athlete coach doing film analysis. It's a SWOT analysis of different asset classes. It is always 3 sentences for 3 strengths and 3 weaknesses that impacted that asset class last week. And then we look at things like PMI that's coming out next week, and we look at what it could have an impact on an asset class, what could be an opportunity to that asset class, and what could be a threat to that asset class. So that makes it succinct but comprehensive enough so that you get a flavor for how capital markets are moving. And we cover China, we cover Eastern Europe, we cover domestic, and short-term munis. We have the top number 1 short-term muni, and for 21 years in a row, it's been positive rates of return for investors. And so we comment on short-term munis as an asset class. So I think that's very helpful for those investors. And I think one of the important parts is for all your listeners is the thought process of gratitude. We woke up today. We're talking to each other. We talked earlier in Asia. What are they doing? They're changing the rules to bring in the the advancements of mining in North America to explore and develop. They're all gold mines because they can't do it. They need fresh mines and fresh capital to take that risk. And we're first mover advantage being there. We got to do that. You know how lucky we are? I mean, it's just amazing. And your beautiful family, you think of it's idea. So MIT did this research and found that when people have gratitude for their friends and their family and for any type of achievements they had, they see more opportunities. It's the person that doesn't have the capacity to be grateful, is therefore not thoughtful or mindful, actually miss a lot of gifts that were put in their hand. So I think for all your listeners, it's just to be positive and thoughtful, and in that process, is just count your blessings, and you will see and capture new opportunities that will unfold over the next 10 years.
Frank, what a privilege. I really enjoyed this interview. You have been really gracious with your time. And, anyone listening has truly gained value today. And I really appreciate it. Your weekly newsletter is a must for anyone seriously looking for a lifelong career in investing. And thanks again. You're really an example for all of us to follow.
Thank you very much for your kind words.
This was an exciting interview with the top fund manager in the resource sector, and I want to make sure I summarize correctly so that you can apply today and what you heard to your investments. Frank Holmes talks about the fact that the resource stocks are very susceptible to commodity prices, yet their operations move very slowly. A drilling season takes a few months, permitting a mine and constructing it takes years, and expanding it takes years as well. On the flip side, we see large moves in equity prices daily. This is a great point because it shows how one must keep his composure and resolve and invest with the best. On our special reports page at www.wealthresearchgroup.com/special reports, you will find the best content online about resource stocks like targeted buyouts, which are companies that will have a potential of getting bought out by large caps, and this creates a phenomenal price action. Talking about becoming a Metalionaire, and Metalionaires are resource investors who are astute enough and disciplined enough to weather out the volatility and corrections and still make a lot of money. And satellite businesses, which I love because they take on less risks than traditional miners, but their upside is just the same. So that's why we call them satellite businesses, because they're around the industry, not inside of it. Frank says that there is definitely a double standard when it comes to gold ownership among fund managers. Some can't buy it for their clients, but personally they accumulate it like crazy. The central banks are manipulating and ushering in a time of disaster. We write about this extensively, more than any other subject. And our flagship special report on this is wealthresearchgroup.com/bank manipulation. Please, I urge you to read it. Frank attributes curiosity, a winning outlook, and inquisitiveness, and being goal-oriented and having a great network of people around you as his main reasons for succeeding in life. And that's a lot coming from Frank. I would say that being curious is so important. Just have a mind that is an internal question mark. It's going to help you a lot. We then went through these resources one by one: gold, silver, cobalt, lithium, zinc, uranium, copper, oil. And Frank is absolutely bullish on gold, silver, cobalt, lithium, and zinc. At Wealth Research Group, we are actively researching for our top zinc and cobalt companies for 2016-2017. So make sure you are subscribed to our free 365 Wealth Letter, as we send out our time-sensitive email alerts when we have completed our rigorous due diligence and have vetted our top pick out of 154 companies we're actively researching. Lastly, Frank talks about the fact that risks are everywhere, and I couldn't agree more. He says that some of the largest money managers around are storing gold bullion, and I urge you to take some time over this weekend to read our series of 5 principles of long-term success in the stock market, designed to make sure you never suffer catastrophic losses and you're always in the game making money. It's on our special report page, and I just want to thank you guys for tuning in every week, learning more, applying it, and becoming a wealth addict, a champion of income. And that's what it's all about, becoming a machine and just improving day by day, week by week. So I'll see you on the next time we on the Titans of Industry show. We had some brilliant shows with James Altucher, Chris Martinson, Doug Casey, Rick Rule, and we have some great ones coming up. So make sure you're subscribed to the channel, and we'll see you next time.